look forward.
Holy shit.
By the FBI. Like, what?
See, the FBI is just infiltrated their
Somebody's
meeting.
watching. I gotta let me share so I could go
Hmm.
over some this here. But yeah, guys, so funding pretty much changes the game if you're a trader. All you have to do is pretty much show that you can pass a certain challenge, that you have a certain skill set, and then you'll become eligible for, X amount of funding. So different times we're living in, guys, different times. It's good stuff. A lot of opportunity these days. So
100%.
all right, so what is this? Requesting remote control your screen, decline.
The hell's that?
Anyway, so we're gonna pretty much go over the whole week, see how this analysis played out, jump over to the charts, kind of go through the thought process behind, what's happening, if we stuck to our original analysis, or if we changed up, and how it played out essentially. So let's start off with DXY, same order as we usually do when starting the week. We always look at DXY, the US dollar, just to see what's going on with the dollar, because again, it makes up for most of the trade. It really kind of decides the trend for a lot of the market throughout the week, especially if there's heavy movement. So we always look at DXY first. So for this week, we were super bearish, definite bearish channel here. We were just below support, kind of dancing around this 90 handle, which was very significant. So we were expecting it to push up a little bit, maybe push down, or give us a lower high or double top, and then push down, continuing with this trend in this channel. And we were targeting down towards the negative 27, closer to 89.35. But we knew if it broke to the upside, breaking this lower high here, and then confirmed it with a higher low. So it's essentially breaking resistance, retesting, confirming it as support, and then moving up. Then we would change our bias and say, okay, US dollar here is looking more bullish than anything else, especially on this 4-hour time frame. So let's see how it played out. Okay, this thing kept going sideways. We did break out of this little channel, but guys, we don't really live or die by trend lines, right? I use these trend lines more so to highlight patterns, to show you guys very apparent trends. But just because we're seeing price action pop out here doesn't mean that, the lid's off, US dollar is bullish, this thing's going, to the moon. Not at all. It's definitely a good, extra confirmation to have, but this is still very much bearish. As long as price action is below 90.25, this whole structure here is bearish. This is more so ranging, if anything else. It's finding resistance here, finding support here. So ideally, we want to see it break to the upside or more aggressively back down to the, downside. So let's go to the real chart and see what's going on now. So we can go ahead and get rid of this trend line, right? Because we really want to highlight and focus on zones now. Okay, so obviously this didn't play out. It played out to a degree, pushed down, didn't really give us a new zero, but came back up. So that's why I'm considering this whole bit of structure arranged. We can actually do this to make it a little more visual. Okay, so price action is playing between these two zones, 90.25 and then 89.7. Okay, we've seen multiple tests in both these areas. This is a pretty wide range, so that means this could definitely continue to form. We may see DXY fall into this week, find some support end of next week, and continue to play the range. That's a definite possibility. But let's go over the conservative options. So again, for us to consider DXY bullish, what needs to happen? We need to break key resistance where we saw a lower high form in the past, again, right at 90.25. So that's really the level here that we need to see a transition through to say DXY is bullish, and then we'll make, a logical sense of it and, choose appropriate targets. We're not going to choose, all the way up here at like the 100 mark, a bajillion pips away. We're going to target the next significant resistance level per the time frame where we're trading on, which is pretty much the 4-hour through the week. That's how this swing trading style is kind of applied. Let's go ahead and move this over. Just kind of square things up. Okay, so this orange trade path is the bullish option. And again, it's only confirmed bullish once we see this higher low, and we see some movement, some bullish volume heading up towards a resistance. Okay, so that's what's, definitely a possibility. However, I'm still going to favor, the bearish option first, because again, we're at key resistance overall. The time frames that we're looking at here, the daily, the 4-hour, very bearish. So we're always trend traders. You're going to have the highest probability trades kind of riding the trend. So that's why I always choose the direction of the trend. I'm not trying to predict anything. I'm merely following an existing trend. Okay, trying to find Nice, precise entry points, conservative entries, tons of confirmation to add to that analysis. So this is what I would ideally want to see to go short again, or we'll just say the dollar's bearish, right? So, I mean, it's definitely going to keep falling potentially, right? Fill in this range once more, but once we see it finally break, significant push below support, retest, and then a continuation, then we could say, okay, DXY is full-fledged bearish again. We're no longer ranging. It's chosen its direction, and we're going to expect to see, more movement to the downside. Okay, so that's DXY for this week, or well, this past week, and what could potentially happen.
That's what you call a shitty week.
Yeah, Chop City.
Mhm.
So we'll see how. I mean, we're gonna go over this again on Sunday for the most part. I'll do a little more, in-depth analysis, maybe lower time frame stuff. But for now, that's what happened, and
Mhm.
it just sometimes the weeks are like that. You can't always expect the market to be perfectly trending. It's when it's not moving in one direction, it could be going sideways. It could be just showing a whole bunch of different signs. So that's why it's good to understand price action and to really understand what the potential is for the movement of any pair or asset throughout a week.
Mhm.
Okay, so AU is next. Let's see how it played out. Again, humongous range. He was either going to continue the range or break lower, because these were the two most likely scenarios because of where price action was. It's going to break support or bounce off support. Very straightforward. Clearly, it bounced very nicely, actually. Back up to resistance, bounced again, back to the downside, and we actually broke 0.7715 here. So this is interesting. Very, very interesting. Is this the real break? It came back pretty quick. Could be a bit of a fake out. If we see a lower high here, that's a lot more confirmation. That's a lot more confidence behind a short setup potentially on AU here. So interesting. So it played out to an extent and then just kind of shot back down. So that was still pretty good. Let's go ahead, take a look at AU. Right, there it is. Nice little entry opportunity in here. Pushed up, hit resistance, completed the range, and then came back down. So yeah, here we are. But the thing is, with this one, we can clear these up actually. So it actually completed this analysis, the push up, and then started following this path, right? It broke below support. Now we're looking for that lower high to form in here and see if it's going to confirm this break here. Okay, so let's go ahead, delete that for a second, and just talk about this zone. So we've seen a lot of wicks in the past, right? We have good volume here, good closure, little to no wick, but it is pulling back quite a bit. So there's a wick present on the daily, I'm sure. Let's just clear this up a little bit more. So we definitely know this is an area of major, major support. And every time it's gotten to this area, we've pushed up. So we really want to be conservative here. We really want to wait for confirmation. Because if you enter short on this and this thing pops back into this range, you're beat, because it's probably going to continue to fill the range. So really, really, really want to be sure that this is the real break. We need that lower high, and then strong bearish setups, and then this could be a pretty monster trade, targeting down towards the weekly. Just because of the size of this consolidation and the distance to the next zone, it makes a lot of sense. It's about the same size as the existing range here. So this would be a great target and also a great risk to reward. So we could be seeing something like that next week. Just to give you a rough idea.
So someone had a question. How do you identify the zone?
Great question. So identify the zone based on, well, I'll always do top-down analysis. So I'll start on a fresh chart, place my monthly support and resistance zones, work my way down weekly, daily. But you're essentially finding zones by the most reactive zones. We've seen price action react, 1, 2, 3, 4, 5, 6, 7, 8, 9 times in this area. This is clearly support. So like, let's just zoom out for a second. I'll go to the daily. Okay, so this was a weekly zone chosen. It's one of our major levels, monthly, weekly, and you could just see how many times it's reacted here, right? On both sides of the market. And I'll start even there. So, oops. So when starting on a new chart, if you're going to do a fresh analysis, always start on the monthly. It's called top-down analysis. We are going to look for monthly zones and weekly zones. So you find these first two zones are probably the most key, so you want to take your time with it. Don't rush it. Okay, you want to find zones where you've seen a lot of reaction before. right? So let's see, we placed a monthly here. We saw tons of resistance here, tons of resistance here. This is more or less a gap. This is also resistance. This is support. So I had marked it in that way. Right at a psychological level as well, 0.94. And then also here, there's another major level here. So this is a bit of a gap as well. Major resistance, major support again here as well. So normally I'll start off by finding 2 zones, and then you just take that measurement throughout and then drop it throughout. So you really want to find 2 major zones. This one's about 1,200 pips to the next monthly zone. Then you would take that 1,200 pips, draw it to the next one. Right, and then you half the zones to find the weeklies, which would be, again, if it's half of 1,200 or 600 pips away. And that's how you mark them this way. I can go over a fresh example if you want. Probably take up a little bit more time here, but
Yeah, you want to, someone said, you guys said you'll explain a little. Yeah, I'll explain, Rosa, I'll explain the the institutional stuff after Nick. Nick's going to be doing some swing trading. Maybe just explain like back to your regular analysis from the beginning of the week. Just
I want to get
just one of the zones.
Yeah, I
I
want to get 2 in.
Yeah, we don't have too much time, guys, but we're gonna just try to answer as many questions as you can based on the analysis that we posted earlier.
Right. All right, so we're gonna get to gold too, because I definitely want to cover gold, as someone also asked in chat. So this is pretty much where we're at for AU. Simply, I mean, this is a range, so it makes it very easy to see. 5 points of resistance, 5 points of support. Price action has been playing throughout. It's very easy to kind of highlight that and then see the range itself. Okay, and then even the halving point, the midway part of the range, very, very easy to see. Tons of reaction on both resistance and support sides. Okay, so that's AU. If we see this lower high, again, very likely that we'll see it drop down towards the weekly. If it pulls back into the range, you just have to kind of bank on it continuing to fill until we see a true break. Okay, so that's AU. Let's jump over to AJ. Okay, so this one was interesting also because it was recently ranging and we just made a move above that range, right? So 84.4 was resistance. We broke through, tested as support, gave us a little flag pattern, and then, shot to a new significant higher high, pulled back, gave us this kind of abstract head and shoulders pattern, broke back into the range. So we really thought that it was going to continue this range, falling all the way back down to 83.25, or if this, was just a lower attempt at support here, wait for the pullback, wait for the transition to present itself, high or low above 84.7, so we could truly confirm this as going bullish. Let's see how it played out. Okay, this is exactly what we wanted to see. It started pushing higher. It bounced a little bit in this area, right? So that could have made us a little cautious on entry. So the real break was right here, breaking through 84.7, and then conservative entry would be pretty much around this area if we see a nice reversal, right? And you also see a nice steady trend, increasing volume, pretty much exactly what we want to see on AJ. So this is where we are now, guys. Played out pretty well. Sometimes, you got to wait on some pairs. You're not always going to catch a trade on every pair every week, especially if you're doing, more of a swing trading approach like I do. But you can survive very well on a, 3-4 winners a week. So that's really all you need when using this particular strategy. But this is exactly what we want to see, guys. So this will be a nice setup, probably one of the better prospects for next week. Just trying to confirm this higher low here. We could throw the MAs on, look for other confirmations. But yeah, at this point, we're looking for entry. So, once we see, some bullish pressure start to step in, maybe, we get these MAs to squeeze price action a little more. We get a little more of a push to the upside. We could drop time frames and then start looking for entries in this area, and could play to the prior high, which is pretty high. We're up around 85.8 to the wick there, so could be a nice little trade into next week. But yeah, so this played out perfectly last week. Excited for this next week. Let's see what's next. Let's do UJ. Quick recap on UJ. So this was all right. So UJ's kind of been tough to read lately. We had such a huge rally lately, and then it pulled back to a huge degree. We finally got structure, and now the volume's remaining, but price action's going sideways. You know, we're just seeing tons of chop. So I kind of marked it here as like a wide range. You know, 110 being resistance, 104 being support. And I was really just trying to play price action around this kind of pivot point I got here at 1092, which is kind of halfway point of the zone. Really where structure's been kind of, you know, fighting lately. So I really want to see some sort of confirmation either above or below to get a, you know, better idea, a more confident idea behind UJ here. So let's go ahead and play it forward, see what happens. So yeah, this thing just pushed up, pretty hard to read, just kept kind of moving sideways just below resistance, and it finally popped. There is a minor little retest there, like testing support, but nothing too significant. You know, I didn't catch this one. I wasn't in on this. But, you know, it did rally. It did rally. So it shot up to 110. That's good. Our mark held. We got a nice bearish engulfing from there. So let's jump to the live chart. There's a couple ways it could go for the week ahead. Okay, so yeah, pushed up. Again, didn't really give us the retest we wanted to see. Something a little more significant would have been nice. But essentially what we have here is what looks like to be just a pretty clean ascending ascending channel. Here, take a look at this. Right? Just kind of highlight it. Again, I'm not really using these levels as like the trend line's broken, you know, it's support, it's resistance. I'm just using it to kind of highlight trends more as a visual. It helps in that sense, especially with fibs too. You know, it makes things a little cleaner in some scenarios. So, you know, this is one of them. You know, what's the potential for this? Clearly, you know, if this channel is to continue, you know, we get a pretty deep pullback, which again, isn't that likely. This was a pretty high volume move. I would like to see something like this. You know, some sort of pullback to a little pocket of confluence. I see the 200 EMA creeping up. These MAs are so like spread. I mean, it's pretty aggressive. They're kind of stretched out. I'd like to see a little more consolidation on the drop. You know, nice slow reversal, maybe a pattern or two. Give these MAs a chance to catch up. Give us something really solid, and then we can make a play back, you know, to a new high even above 110. So we'll see. We'll see. That's the bullish scenario for sure. I know some aggressive people are thinking, hey, I'm gonna short this down to 109.2. You know, do what you want, whatever works for you. I like trading the trend, so I'm always going to choose the conservative option. Again, you don't need that many wins to be super profitable. So this is where we're at. This is what I'm going to wait on. And then again, of course, if it breaks support, you know, we're looking for the opposite, right? Just following structure, following the trend, following what the market gives us, and then making choices based on that. Okay, that's where we're at. So yeah, this is the possibility, right? As long as this area holds, we're pretty much bullish. As long as this bullish channel holds, you know, again, very bullish. So we really need to see a significant break, confirm lower high below, and then we could say, all right, UJ's probably bearish now. We're gonna start looking at shorts. Hey, that's UJ. All right, let's do EJ real quick and then jump into gold. So overall, we were super bullish. We're waiting for a bounce off a key level, off fib level 38.2, right? This would be a nice level to see this kind of swoop down, push back up, confirm a higher low. Great opportunity for this pair and how this was setting up. So that was our first option. But then, you know, we always consider both sides of the market. So there's a chance that it could have fallen back into the range, could have seen some lower highs. And then if this had happened, we were going to reanalyze and kind of see, you know, what happened after that. So let's see how it played out. This was probably the best setup for this week. I mean, this is a perfect flag pattern. You guys can, I'm not even going to highlight it on this. I'll jump to the live chart in a second and show you. But I mean, for those of you guys that know patterns, this is a flag and a half right there, broke out, quick little retest, continued up, retested again. So multiple entries in here and in here, and just shot straight to the negative 27 fib level. So beautiful trade out of EJ. You don't see those too often. EJ is kind of a wild card sometimes. You know, you often could miss a trade because the volume's so large. But yeah, this one was perfect. Gave you two potential entries, nice pattern, tons of confluence. So yeah, that was EJ. Played out great for the past week. All right, here we are. Right, played out perfectly. Shot to the negative 27. You know, some entries are highlighted in here, as I was going over earlier this week with a member. And then also in here, another MA cross, even on the 4 hour. So that means there's tons of 30-minute entries, all in here. And look at this, nice little, it even came back and tested this minor level of support. Absolutely beautiful out of EJ this week. All right, so but what's next, right? How do we go about this next for this week? Well, first we want to get rid of our previous trades, and then you just want to redraw your fibs and go over pretty much the analysis that we've been covering this whole time. So there's a 38.2 right there. Where is this stand edge? Oh, it's lining up with the, oops, there it is. Okay. And then there's the push. So we shot off to the negative 27. Okay, so from here, again, we're pretty much looking for a pullback at this point. Yeah, ideally 38.2 or 61.8. Obviously too high to make a buy on this, but I'm not going to get too into it yet because we are going to cover this on Sunday. So essentially, we're gearing up to continue with this trend to enter at key fib level with nice confluence and just ride the trend, guys. That's really the greatest trades you could find, is just in line with the trend with good movement, good structure. Okay, so that's EJ. I'm going to wrap this up with gold real quick. Okay, so we were at key resistance, 1875. Nice psychological level as well. Okay, we're waiting for a little bit of a push higher. I want to see a little more significance, or high or low at least. Again, with some strong bullish setups, that would give us enough confidence to go long on gold and target higher towards 1910, potentially higher. Or we could have seen price action kind of fail here. There is a little bit of a whipsaw, kind of some unpredictable price action right there. Some kind of fake out. So if this did pull back, we're waiting for a lower high, and then we're simply going to target towards our weekly support, which again is also psychological level, 1825. So there is good confluence there, whichever way this played out. This actually followed this trade path exactly, pushed up into resistance, so it touched our 0% for the second time, gave us the higher low with a nice morning star, and then just took off straight to the negative 27. So this would have been such a beautiful trade, literally no drawdown, straight to TP. Yeah, like it hit 1910 on the dot. Actually went above a little bit, 1912-ish. But yeah, great trade, phenomenal trade. So let's jump over to the live chart real quick. Okay, so this, I'm gonna get rid of fibs on this actually. So this is, it's not the strongest trend right now. It had struggle breaking through this, as you can see. This is a little bit of chop. You definitely want to see a little more of aggressive movement breaking through resistance or support. So little sketchy there, but we're seeing good movement now. So this either is going to continue, which I'll cover an analysis on Sunday, or it's going to start to fall back down. But we're seeing another pattern here. So come back on Sunday, guys, and I'll do a full analysis on gold a little more. But yeah, I mean, it played out perfectly last week. I mean, shit, look at this. Good stuff. Good stuff. All right, so this was just a recap of the Sunday analysis and how it played out through the week, and pretty much showing you guys how you can utilize this and kind of the thought process behind this as it's playing out. But yeah, I mean, this is how I pretty much go about taking my trades. I'm monitoring on the 4-hour. As I see price action move around these key zones, I start to present confirmations that I look for. I'll start dropping time frames and taking trades as it plays out. If I don't see anything, I don't see anything. Sometimes it's like that. I would say maybe 2 to 3 out of these per week play out that I'm able to take a trade on, and then maybe 1 or 2 that I miss, or one that just doesn't execute at all. That's part of trading. There's good weeks and bad weeks. Sometimes all 6 play out. So that's just pretty much a good summary of this past week and the process behind it.
Hell yeah. Did you lose any? Berkland, we are always taking losses. Losses are part of the game every week. There's going to be, the key is keeping them small. I'm going to show you some of my trades and how I'm keeping losses small, but we're not here to say that we don't take losses, guys, because it's not the reality.
Right.
We
take that. I'll take that.
But we also do relatively well for ourselves. So I'm going to go ahead and share up here. And we're going to go over something a little bit different, guys. The methods that me and Brian have been utilizing over on the live sessions for New York. So me and Nick have always been swing traded. Nick always has been focused on swing trading. I recently transitioned to trade a little bit different of a style using these tools that I had learned from someone else. And it's essentially like what I like to call it is the institutional trading strategy. Reason being is it really is based on, it's a more statistical based approach. It's really based on the volume, based on the supply and demands. There's a lot less digression or personal judgment when it comes to like placing your levels. It's all just based on these tools that I'm about to implement and show you guys. We actually just created some new content for it inside of the course. I'm about to upload it today. And at the end, I'll show you guys. We already have a bunch of content in there because the process of starting a new strategy or learning any strategy is obviously learning, the lessons on what it involves, and then it just gets right into back testing. You got to back test it. You got to test what you're looking for over and over and over and over again. So you start to build confidence in the live market, and this is for those that have been on the live sessions, they probably have seen it with Brian and myself. There's trades that in the beginning when I was first starting it that I wouldn't get into, and now I'm taking advantage of them and I'm seeing new opportunities, and that's just growing in your craft, growing in your skill set, and playing the long game. If you fail on the first day, you don't quit. You know what I mean? You got to just take it one step at a time here. So I'm going to go over just the tools really quickly. We're not going to get too in depth into it because I do want to touch on some other topics at the end. But all of this information is inside of the full course membership, inside of the Learn and Earn group. One of the things that we're doing that's really good is we're back testing and recording all of the back tests. So we're putting all of the before and after screenshots into a Trello board, which I'll show you guys later on. So literally every single trade that I'm taking with the strategy, you guys can go back, look at if you want to learn it. So let's dive into it a little bit. The actual tools, if we just go into indicators, come down the volume profile. Unfortunately, you have to have the pro version of TradingView to actually bring this onto your chart. It's called the session volume. So what this is it pulls the volume for each session, the New York, the Asian, the London. It shows the amount of buyers and sellers that are in the market during those times. So I'm gonna just go ahead and bring it on. We're just gonna bump up here to the 30-minute. The only pairs that I'm trading now are GU, GJ, and UCAD. So I'm only trading 3 pairs. In particular, GU and GJ. This past month, what I noticed is UCAD hasn't been as consistent. So we're simply not going to put as much risk on that pair because it's not making us as much money. So GU and GJ are mainly what we're focused on. And now we have all of these levels here, or all of these sessions and all of their volume. And like, what does this actually mean? So very briefly, we're just looking at this. And if you watch that video I put in the Telegram earlier, I went over this. This is just the buyers and sellers that are in the market during the session. The shaded region here, or the non-shaded region, this is just an insignificant amount of buyers and sellers. So this isn't as critical for us to consider. And then all of this, the darker shaded area, this is what we want to consider. This is the most buyers and sellers stepping in. And the point at which the market is actually having the most interactions, the most transactions, is this center line here. The analogy that I used earlier, guys, is like you have Walmart, you have Target, you have a little convenience store in the middle on the road. Everyone's going to Walmart, everyone's going to Target, and they're buying products there. There's more value there. There's more buyers and sellers in those 2 stores, and no one's going to the convenience store. So I'm going to go over how that relates to this a little bit more in a second. But think of it down here. This is a store that's not a lot of people are interacting, not a lot of people are transacting in, maybe going out of business, whatever. And this is where most of the buyers and sellers, these prices over on the right-hand side, are where people are really interacting with the market. What I do now to actually create my zones is I come up to the 30-minute, sometimes stay on the 5-minute, and I just look for two areas at which these zones overlap. So for example, we can see if we go back, we're looking for more consolidating areas. We can see right here, price for almost 3 days, for 2 days, price was consolidating. So what I want to do is I'm going to bring on the third tool. So there's three that are involved in this strategy: the VWAP, the volume profile, the volume session, and then the fixed range. All the fixed ranges is we have these 2 days, we want to combine them into one day. So it's like, boom, we're literally just combining these 2 days. I take this off, and then this is the combined metric here, the combined scale of, okay, these were the supply and demand for those 2 days. This is the what we call the point of control, the area that the most buyers and sellers transacted during those 2 days. And then what I'm going to actually do, and I'll go on to my actual chart in a second. What I'm going to actually do is I'm going to highlight this. So I'm going to use this. This is my zone. So when price is within this range, we know that there's a lot of transacting going on. There's a lot of value. This is where we want to trade. You could look at this as resistance. You can look at this as support. And then we have this middle line right here, the point of control. And then this is the area that there's going to be probably the most reaction to whenever price visits this area. So it's a way different way to draw your support and resistance. It's a lot different than the key levels we've been drawing based on like the higher time frames. And this strategy is really only for the 5-minute time frame. So I'm trading this only for the New York session. You could trade it in the London. I'm not awake during the London session, so I don't trade it. You could trade during the London session, but it's mainly during the New York session. So I only trade from like 8 to 11 in the morning, which works better for me because I can trade simultaneously, do other work or whatever. Sometimes I'm like literally on my phone in the morning and just have everything plotted out. And then when 11 hits, I don't take any more trades. I'm done for the rest of the day. And I like that better. It fits my lifestyle a little bit better than like swinging trades, holding them overnight, everything like that. I'm just not trying to do that much anymore. So going back into a scenario, let's say we're looking at UCAD. How are we going to start to implement this other tool? So I'm not going to go over how to set these tools up, but as you can see here, I have these levels placed, and I did exactly what I just showed you guys. If I were to bump up to the 30-minute time frame, I have this one marked just as an example. If we were to bring this back on, a lot going on now, right? But I'm going to just remove this, and we can see the market was consolidating during these 3 days, during these 2 days in particular. That's where I drew my overlapping zone, and then I went ahead, took this off, and I have my zone here. I have my point of control, which as we can see for the week held really nicely. And we're just going to go over an example of one trade as I bring on what's called this VWAP tool, which you do have to configure. Again, all the settings for it are in the videos that are inside of the course. And there was actually a really easy trade today that I just like wasn't even online for now that I'm looking at it. But basically, this is based on derivatives, guys. So it's like the standard deviation. So basically what that means is when this tool right here, it's obviously an indicator. When this tool is flat, which means the market is consolidating for the day, these bands, as you can see, are pointing very flat for the day. It's what we call mean reversion trading. So we want to trade at the end of these bands. We want to trade when price reaches the tops and the bottoms. The reason being is the probability that price is going to revisit this center area right here is high in comparison to sitting up at these higher bands. Think of it like with my analogy, just think of it as there is a popular product on the website here. People are scrolling here. They want to try to get to that product that they actually want, or in the analogy of price, people want to get back to a price ultimately that is more favorable for more money to come in and to transact at. So going over an example of an actual trade that we would potentially take on this, utilizing all of these different tools, in particular, just the VWAP and the volume profile, is for the day, guys. If I'm coming into the day and I'm telling myself, okay, the market is flat, and when it's trending, it will always either stay above or below, or above this for the entire day, or below this for the entire day, this center line right here. So as you can see, price flipped, it cracked this center line, it broke below. So to me, that tells me, okay, we're not really trending for the day. And then we broke the support right here. So again, no trend for the day. And this is just the New York. So this is a lot different than normal trend trading on a higher time frame. So this is a lot more immediate. We're on the 5 minute. As soon as I'm seeing this break right here, I'm telling myself, if price reaches the bottom of these bands, if it becomes overextended, we're consolidating for the day, we're moving up, we're moving down. I want to position myself to take a trade based on the fact that price will most likely pull back to a more favorable, more valued price for the market, which would be at the center of this area. So my analogy that I did before about Walmart and Target and buyers and sellers and not going to the convenience store, this is kind of what I'm talking about. We have our two zones. Look at this. This is Target. This is Walmart down here. This is the convenience store, this white space where I have no zone. People are going to be flocking to this store to get deals, flocking to this store to get deals. People aren't going to be doing much in this area. We don't really want to trade in this area. This was also a trade. It's not on the chart right now, but I actually took this one. I had missed the one down here, but I took this one this morning. So as price was coming up into this area, we hit the triple top. We had one, two, let me take this off. 1, 2, 3 times up in this zone. Remember what I said, price, we don't really want to trade when price gets in this white zone. We're assuming that price is going to continue to search for value. It's going to continue to search to be in these zones where there's a lot of volume. So as price started to reject this high, this resistance level, reject this white space up here, to me, I was like, there's nowhere for this pair to go besides back to a more balanced position, which we have the point of control here. We have the center of this VWAP tool. And that's ultimately what I targeted with the trade. So this was one of the trade ideas. I uploaded this before and after. I did a little breakdown earlier on like everything with it. But one that I missed that would have actually been even much better position was price came down, tested our point of control. So remember, this is the area where there's going to be the most buyers and sellers, the most transactions going on. We really want to trade when price comes to these areas. In line with this VWAP tool. When price was up here in the center, because we're flat for the day, I don't really want to do anything in here. I want to wait till it comes to one of these edges. So it came to this edge, and we could do one of two things. We could start to literally buy as soon as this happens right here. Our targets are always back to the center when we're taking these trades. So always back to this region, give or take if there's price action there, whatever. It can change a little bit, but hypothetically, we're always targeting the center. And then I could either get in down there, or I could even get in after the engulfing, still have the same target right here. And the good thing about this is normally we can have our stops a bit wide, especially if we get in down here. And this is always kind of our first target. First target's always the center. So that would be TP1. And as we can see here, price breaks this and flips. If this flips and breaks, turns into resistance, we could always exit on the retest. And we've shown this so many times on the live sessions, how to cut your losses short. We're very rarely ever taking a full position loss. And we're risking 0.5%, 1% per trade, sometimes scaling in even more. So it's very easy to be confident in the edge because it's based on the statistics. It's based on the actual volume. It's not based on random lines you're putting on the chart. So it's just very easy to be confident when you're in a trade, when you're in drawdown. And I found that to be extremely comforting in trading this style. So again, could have had 1 or 2 entries, could have entered down here, could have entered up here, could have entered down here and scaled in up there. I'm always trying to get it at the like lowest possible price. But ultimately, I'm actually going to save this one just for my own sake, screenshots and whatnot, so I can go back and review this. But ultimately, price respected this support level. And we can also see that this was that daily low, not only for today, but also pretty much for yesterday. Yesterday's daily low was right here at 1.20570. And then this level also 1.20620. So we have a ton of reasons to be comfortable to sit in the trade. If this thing jumped down even more, I would have just gotten in more realistically and just covered the position. And then there's one trade earlier this week in the signal room that we did where we entered, price went against us. We entered again, lower, price came back to break even. We had profit on this position, closed the other one at entry. The best way to navigate being in drawdown. So that's just a quick overview of the institutional strategy that I'm using. I'm trading it every day on the live sessions in the Learn and Earn group. So if you guys want to learn it, all the material and literally before and after shots, everything is in there. You'll literally watch me trading it with Brian. So it'll be fairly easy to learn. And I'm just gonna be honest, like Brian was one of our members. Brian went and learned this strategy. He approached me with the strategy. I learned it from Brian, and now me and Brian are doing the sessions together. So the best way to learn is to literally just work with someone who's doing it. I did it myself. It takes away the entire learning curve of trying to figure it out yourself. You know what I mean? I watched a few videos. I just started meeting with Brian. He brought me up to speed on it. And like, I hate to say this now, but like me and Brian are doing really well. And I'm even doing on like a faster pace than Brian right now because it just comes down to I've been trading a long time. You know, I have experience with price action, everything like that. And I'm just combining everything and just trying to be as confident as possible through the work that I'm putting in. So that's the entire strategy. It's, you know, explained a lot in a lot more detail inside of the program. And yeah, so if you guys are interested, you can get that material inside. And that's pretty much it for that. For the analysis piece of the Webby, we've got like 10 minutes left. So I just really wanted to wrap it up with some information on the funded trader because we did launch it recently this past week. And there are still some outstanding questions with everything going on. You know, what, like Nick was saying earlier in the session, if you're trading, you ultimately, the goal is to get funding. Like that's the goal from day one. I mean,
Yep.
that's
I
all the
wish I had the
conversation.
option, to be honest. I
Yeah.
wouldn't have had to grow an account the old-fashioned way. Like you don't have to. It's not as difficult as it used to be to actually become, you know, free from trading.
Hmm.
And yeah, funding is one of those opportunities now. So it's actually crazy.
Yeah. Like the way that I look at it is literally the day that I found out about FTMO, it like opened my mind up to the possibilities and it that could occur if if you were profitable, if you were able to be consistent, there was a serious opportunity for you to make money. And it simply was just not available. But like literally like 1 or 2 years ago, there was no one doing this, providing funding for people. And now there is. So guys, if you're learning and starting off, there is no reason to trade your own account like a bigger or like a to learn on a bigger account, like to learn on a 5K, 10K, 25K. Because losing money is what's gonna really crush you and psychologically set you back in trading. Losing money in the beginning. Like if you're just trying to learn and you're losing $1,000, $500, psychologically you're going to become very hesitant and you're never going to take entries again. You're going to be really afraid to lose money. And no one ever made money being afraid at the end of the day.
Sure.
Yeah. No one ever made money being afraid. FTMO is just a prop trading firm that will provide you with money very similar to ours. Let's see this. So I'll pull it up. So as some of you know, we were working with another firm a little while ago. We decided to part ways with them for one of several reasons. Mainly because me and Nick have been growing Forex League for 2 years, have had no issues with the transparency, with you know, delivering valuable products to our clients. And as soon as we partner with a third party, everything goes to shit. Like, you know, the dude just doesn't follow through with things that we needed to get done. And it is what it is. That there's good business partnerships and there's bad business partnerships. Doesn't mean that it's good and bad people, whatever. It's just business, you know. So business didn't work out between them. We're doing our own thing now, and we're obviously, you know, excited about it. And the whole purpose of it, guys, is you get everything that these other firms offer, specifically FTMO. They are the industry leader, you know, and we're new, so we're not going to say we're the best ever, but we're obviously working to get there and to have the payouts and everything on a similar scale. Ultimately, we are capitalized by private investors, and the goal, guys, is to find good traders. The goal is to find people that can trade. Nick and I have always had a like dream of starting a firm and starting a trading floor with other, like, the whole reason behind starting Forex League was literally just to meet other people, other traders. And now at this point, if we can meet not only other traders but people who are on a level, that we ourselves have worked to get to, and maybe they are even above us, then that is what we're looking for. That way we could all benefit, we could all be capitalized, and we can start to grow this thing a lot larger. So we're looking for people that can trade. You prove yourself in the challenge, and we have two programs: the standard challenge, which is $50,000 account, 100K, and 200K. So you sign up with the sign up fee, which is $289, $499, $799, and you have to go through phase 1 and 2. I've done these before myself. Nick has done these before working with clients. They're not easy. The challenges are not easy. They're meant to find like people who can actually trade. They're meant to find good, consistent people with real strategies. I see people all the time trying to use EAs that they haven't built themselves. The EA makes like a crazy profit in like 2 days, then it like blows the whole account.
Yeah,
Like,
there's the only real way to pass these is to be a decent trader, and that doesn't mean just dive into it too. I think, of course, like, you're learning, you're practicing, you'll know your skill level by the time you're ready to take a challenge. And when the time is there, it's an opportunity to get a large trading account, and at a pretty decent in a decent way, in a very realistic way.
yeah, yeah.
Love it.
It's not easy though. It's not easy. We're trying to make the challenge as fair as possible. Compared to some of our competitors, we went ahead and increased the loss limit per day, the loss limit total, so you have more room to work with to try to pass. The target's 10% for phase 1. So what that means is you're going to get an account. We're going to give you 35 days. You got to make 10% without going down 6% in a day, without going down 12% total. If you can hit the 10%, you pass phase 1. You're halfway to getting funded, and then you get another account. 100, you're trading on whatever account size you sign up with, you're trading on. You get your second account, and it's supposed to be easier, but psychologically is very challenging. You get the 60 days, you need to hit 5%. You can't go down more than 6% total, same thing, or 12%, or 6% a day is 12% total. If you make the 5%, you pass phase 2, you get capitalized by our fund. So you're proving that you can trade. Once you prove you could trade, we'll go ahead and give you an account with whatever size that you signed up with, and then you keep 80% of the profits you make. It benefits all of us, guys. You get capitalized. We're able to grow our funds. We're able to find traders that we want to potentially partner with and work with on other things as well. That's the whole reason behind starting this thing, guys, is for me and Nick to find the next good traders out here so we can continue to build a community and to do good work and to start something much larger than this is right now. This is only the beginning of what we're planning on doing.
Yeah, exactly.
Yeah.
Yeah, so this is a great opportunity. Oh, there's a question in chat, actually.
Let's see. What about copy trading to this prop firm? So there's no copy trading allowed besides if you would buy multiple accounts yourself. You can copy trade between your own accounts, but you can't use an EA to copy trade from someone's signals. You can't, have a group of people copy trading accounts, nothing like that. We're not doing account management on our own platform because the goal for us is to find good traders. It's not for us just to trade a bunch of people's accounts on our own platform. It's a clear conflict of interest. We're no longer doing that anymore. So anyone that we're managing accounts wise for clients, they have to purchase it from another firm. They're not doing it on ours. It's just not what we're trying to do. It's definitely a conflict of interest as we've seen in the past, and we're not doing that. But all of the rules are in the FAQ at the top of the page. Very straightforward with everything. If you guys have any questions, The chat is live Monday through Friday, 8 to 5, and you see the response time normally under 5 minutes. One of the priorities that we've tried to have for the business is excellent customer service. As we can see down here, kind of in these little pillars, client focus, we're committed to providing excellent customer service. We see a lot of other platforms, they fall very short in this. So we're trying to have that be like we're trying to be an industry leader in that category, provide you guys answers to your questions as soon as possible. There's also a Discord chat that you can join, that we have agents in there that are answering questions in there as well. So this is all just, launching this week, literally. So we're still working towards getting everything as organized as possible. But again, we're trying to, be the best that we can be with what we have right now. It's only the beginning, so we have a little ways to go with it. But we're already having some traders on there that are showing some success, and we're excited. We're ultimately excited to just see how it plays out and to just find people that can actually trade, which is the goal.
Yeah, yeah, absolutely. Someone in the chat is asking for the Telegram.
Do y'all have a free Telegram? Yeah, we have a free Telegram. There's a Telegram for the funded trader. There's also a free Telegram for uh, uh, Forex League, and where y'all give free signals. We're gonna have a new signal room coming out very soon, within the week. It's not necessarily, we have a signal room already. We're about to just do a little different variation. The learn and earn is me trading live. My other partner trades live. You guys want to really learn, that's the way to do it. Hop on the sessions, learn from us. And obviously everyone just wants take profit, entry, stop loss, black and white, nothing else. So we're about to have another group dedicated solely to that, and it's going to be delivering anywhere from 3 to literally like 8 signals a day, just stop loss, take profit, entry. And it's going to be exactly what people want. People want that. People are busy. I get it. You're at work, whatever. You just want to plug it into your phone and you want to be done with it. So you guys spoke, we listened. We're about to do that as well. Yeah, there'll be summaries of all the results every single week. Everything will be summarized, so you guys will realize that it's actually profitable and everything like that. And we're ultimately excited to get all this out to you guys. We're excited to get all this out to you guys. We have a lot on the way. We appreciate the support, and like I said, it's only the beginning out here. Growth mindset, guys. We've been doing this for a few years now. Trading for several years, growing the community for a few years, and the mindset never changes. It's always, how can we improve? Trying to be as positive as possible. You can't ultimately be positive 100% of the time, but you can be positive 99% of the time. You got to take the negative, bounce back from it, find another way. And that's what we've done. And that's all we can advocate to you guys. We're also going to be showing in the near future some motivational type stuff for you guys. Just get it out there. I mean, we've been working hard behind the scenes, so it's time to bring all that to the forefront as well. So you guys are about to be seeing some interesting things out here. Your program,
Yeah,
so
this is gonna be an interesting summer for sure. Definitely a lot going on.
see the summer of Forex League. That's all I gotta say.
Right.
So yeah, the website SEO is not great. Your search funded trader doesn't even come up. We're gonna reinvest and get the SEO up to speed and all that, guys. We're just happy that we've got it launched. The back end is very sound. You'll get your account literally within an hour if you purchase during the work hours, and even after hours. I'll log on and try to get it done. And yeah, so we're working hard. We got it all in place, ready to go for you guys. And if you have any questions, feel free to reach out to me and Nick. But I think that'll pretty much conclude the webinar, Webby, for today.
Yeah, pretty much. That was good, well summarized. But yeah, guys, any questions? Hit us up on Discord or Telegram. And yeah, enjoy your weekend, guys. Kick back, relax. You owe it to yourself.
And get ready for what's to come, because it's about to be freaking wild out here.
Yeah.
But Other than that, yeah, we're gonna have a little sale this weekend on the lifetime membership. We'll post some details about it Memorial Day. Like Nick said, enjoy the weekend. It's crazy. We're already 5 months into the year. 5 months
Yeah,
into the
it's
year.
flying by, man. June's almost here.
Yeah, flying by. And
Wild stuff.
don't forget about the goals you guys set in the beginning of the year. Just because the year is flying by, don't in a blink of an eye, it's going to be 8 months in, 9 months in.
It's absolutely
Refocus last 6 months of the year. That way, you guys get some shit done. You don't want to wake up next January and be like,
right.
fuck.
Same spot. Same spot as last January. No, yeah.
No,
Yep.
no.
Exactly.
Yeah.
But yeah, we'll see you guys Sunday. Yeah, that's right. Sunday Market Blitz. That's the next session in preparation for the week ahead.
Yep.
And yeah, that's it. Closing comments.
That's it. That's it. All right, guys. Enjoy your weekend, and we'll chat more this weekend.
Peace, guys.
Peace.